Other indicators we are using is a moving average. So we're using moving average, the simple day moving average, and exponential moving day average. They serve similar purposes. Basically, those moving averages are magnets that attract to them price. And we can use those lines as a gauge that tells us a price level. So for example, we're looking at the blue line. The blue line, it's the 50 simple day moving average, and it's the most watched moving average by the majority of money managers around the world, no matter the equity traded. So it's a widely recognized standard for an average price. So it's a very important line indicator to utilize in your trading. So that's why we included the 50 in the chart. Another line that is very important is the orange line. This is called the ATMA, or trigger line. Basically, what that tells us is very important also, especially for swing traders. Stay in the trade until you see the price is closing above the ATMA. I'm looking at the closing price, and then close the position when price closes below the ATMA. Okay, so for example, in this picture right here, we are seeing price moving up, and even when it pulls back right here, price continues to close above the ATMA. So closing, pulls back below the ATMA, but then it bounces off. So it didn't close, stayed in it. So you stay in the trade. Continues to close. Even down here, when it pulls back down, price bounces off and continues to close above the ATMA. Here, and then here, pull back. Now, if you are in this trade all the way, and you see this red candle, another red candle, so this is the indication that things are starting to pull back and going into bearish territory. But you see, up to this point, up to this candle, the price is still closing above the ATMA. On this day, however, it didn't. It opened below the ATMA, and by the end of the day, closed below it. So this is the indication that as this bar is forming and price start making lower lows, you see there is a low on this day, right there, and then price broke below the low and closed below the ATMA. So this would have been the indication. Close the position, wait until price returns above the ATMA and closes above the ATMA. And then pulls back all the way down to the 50. So this, then you could have used the 50 simple day moving average as a place to re-enter the trade. See, the 50 act as a magnet up to here, and it's still working as a support area. When price, if price moves below the 50 and closes below the 50, it's going to be very tricky. That's going to create a lot of sell-off, and it's going to cause a lot of panic in people that are holding these coins. You know, remember, this is a Bitcoin, okay? People bought this thing 3 or 4 years ago, $10, what was it, $20, $100? Okay, let's say $200. So let's say these people are sitting on $200 coin. They have one, okay? And they pay $200, and all of a sudden that $200 is worth $14,000. So these people are not going to feel the pressure like people that most recently bought that same coin that these people paid $200. These most recent people paid $17,000, $19,000, $20,000. Imagine the pressure that these people are feeling. They see a little red candle, they see things pulling back. I mean, the people that pay $200 are sitting on it, and actually they're happy that they see price going down, because then they can buy more. Those are the wealth. Okay, so anyway, it is very important to pay attention to those lines, and the 50 is going to be a very crucial point when price reaches there and start closing below it. If price closes below it, it's going to trigger a cascade effect and a lot of sell-off. So that will be very profitable for those that know how to sell. And in this course, you will learn that as well. Anyway, so that's how we use moving averages. And then we have the others, the gray line, that's the 21 simple day moving average. And we have the purple line, that's the 34 EMA. Those, if you have the basic, if you have a basic platform with TradingView or whichever broker you use and platform you use, if you can only use 2 moving averages, pick the 50 and the 80 MA. If you can select more, 50, 80 MA, 21 simple then moving average, gray line, and the 30-40 MA, the purple line.